What's going on, everybody? Welcome to the Get the Bag podcast. I'm your host, Gladia Castro. I got my co-host, Tim Park.
Hey, fam.
Happy Wednesday. Hope you guys are doing great. It's nice and warm out here in LA. A little
Yes, it
too
is.
hot. But again, just want to appreciate everybody who's tuning in. We have a really exciting show for you guys today. But before we get all into that, don't forget to like, subscribe, follow us on IG. We're on here every week, typically Wednesdays at 8 a.m. Pacific, 11 a.m. Eastern. Without further ado, I'm really excited for this guest because we connected over at an event we went to a couple weeks ago. And talking about multifamily, which is something that, Tim and I kind of dabbled in. He specifically has done syndications. He has a great story. He has over 30 years of real estate. He's a real estate investment vet. He's been in the game for quite a bit. He's controlled a lot of money, $325 million in real estate transactions. He's an entrepreneur, an author, real estate trainer, public speaker, personal coach. I can go on and on. He deals a lot with, multifamily, specifically hedge funds, strong personal resilience, deep desire to help others live an extraordinary life as he's helped coach hundreds of investors to fulfill their dreams. So let's welcome Mike Morawski to the Get the Bag podcast. What's going on, Mike?
Hey, how are you guys? Good to see you this morning. Glad
Hey,
to
Mike.
Yes. Yeah, thank you so much. I know you have a busy schedule. You have a lot going on. I'm really excited to, because I was really taken back when I heard your story and just kind of 30 years. That's you've been through it. You've been through the trenches. So I'm really excited for people to get to know you. So like anything else, like when we get started with the guests, like tell us a little bit about yourself. How you got into real estate, because 30 years, I mean, that's quite a bit of time, and you've seen it. You've seen it
it
the
all.
market kind of go up and down.
Yeah, 30 years, definitely been in some fire, that's for sure. So, I got in the real estate business kind of by accident, really. I always tell people, I say, hey, I didn't come from a family of entrepreneurs. We had no real estate background. My parents didn't, invest. I wound up in the construction business. And it was funny because I had a swimming pool business that I was trying to operate in the Midwest. And it was a constant turnover of employees because, you put people on unemployment, they didn't come back. You spent a lot of time and money training them. And I started doing room additions and kitchen and bath remodeling. And then before I knew it, I had this huge company and burned out because as an entrepreneur, we do everything, right? We do all the paperwork and marketing and hiring and firing and bookkeeping. And I was still in the field banging nails. I remember just burning out, waking up one morning. And at the time I was married, I told my wife, I said, hey, I'm done. I can't do this anymore. So we sold the company. And I went to take a year off, but like any good entrepreneur, you can't ever put anything down or stop running your mind, right?
Right.
So, during that year, we bought a couple of 2 flats, house hacked them. But what's really important is I met a real estate agent along the way who was really successful. And years before, I had heard Jim Rohn say, success leaves clues. And that had always stuck with me. So I always tried to pay attention to people around me who did more, who were more successful. But this guy was really successful. And I went to him. I said, hey, Todd, I think I'd like to go in the real estate business. And he said, oh, I think you'd be great at it. And he encouraged me. I went and got licensed. He made me this cassette tape that I listened to over and over and over again. I think I totally stretched it out, right, from listening to it so many times. But the fundamentals were so instrumental in what I did. I went in the real estate business. My first 9 months in the business, I sold 78 single family houses. I was RE/MAX Rookie of the Year. I went on to build a team selling over 125 houses a year. Mostly investor-based business. So we really focused back then. People said, oh, you don't want to work with investors. They, are too spotty. They don't know what they're doing. But I was investor centric, right? And worked with them and just grew a business from there. And then do you want to unpack that, or you want me to keep going? Or
Yeah, I mean, I think specifically that kind of led you to multifamily, right? So because I know having a background in real estate and being an agent and building a team, I mean that I think what year was that specifically when you kind of
Yeah, so early 90s, I got in real estate, like 91. And 2005, I saw the market starting to soften and shift. And I
mm,
knew that things were going to be different. I wouldn't be able to keep that production up. And we were selling, well over 100 houses a year for about 12 years. And
Mm-hmm.
um, so I had always wanted to go in the apartment business. Back when I was in the construction business, I had watched some local syndicators in Chicago here that grew these huge businesses. And so I understood this, right? I understood you raise private equity, you marry it with a great real estate deal, you stay in the middle, and as long as everything goes well, everybody does well. So I said, hey, I'm going to give this a try. I went out, I bought a small 11 unit apartment building, and
mhm.
I syndicated that, and it went relatively well. I mean, I learned a lot of things along the way, made a couple of mistakes, but from there I went on. I raised $18 million. I bought $60 million worth of real estate. It was about 4,000 apartments in 5 markets around the country. Vertically integrated a property management company managing 7,500 units. So I built $100 million company in 30 months.
Mm-hmm.
So that's
Wow.
that's how I got
It's
into
amazing.
multifamily. Yeah.
Now, did you were you still doing residential when you got your first multifamily, or how did that work?
Yeah, great question, Tim. I actually did do a little bit more residential. I had a team, so I really started to focus on the apartment stuff myself, and my team kept selling residential.
Mm.
And I got my first 2 syndications done, and I said, hey, there's something here. And we started to all kind of shift. There were 7 of us on a team, and so I had a great support staff to begin with, and administrative staff, and we just kept going in that direction. So
Yeah.
Yeah. Well, I was going to add in terms of syndication because a lot of people don't know what that means.
Right.
yeah,
To like, what led you to syndication? Did you kind of already have that knowledge, or do you kind of consult with mentors to kind of put a deal together?
yeah. So like I mentioned, I had watched a couple other syndicators in
Right.
Chicago, and I understood you just raise capital from people who want to be in real estate, and you marry it with a great real estate deal. You know,
Right.
it was nothing fancy. I didn't do anything fancy, and I don't necessarily know that the business is really fancy. Other than that, right?
Right.
It's a group of people coming together to participate in a piece of real estate where everybody can make a profit and participate in tax advantages and participate in cash flow and participate in long-term wealth. So it's about, creating, offsetting today's inflation and creating long-term wealth for yourself, right?
That's
Yeah.
great.
So I know it was back in the 90s and then early 2000s. I think you were saying about, I think, your first, kind of apartment deal. So can you tell us, more about like during that time in real estate and what was some of the challenges of getting into a multifamily and then syndicating a deal as well?
It's kind of funny, Tim, because I'm kind of the type of individual that I don't look at challenges. I just kind
Mm,
of run through them. I'll run through a brick wall to get something.
yeah, I
And
love it.
so, just my first deal, I went and put this thing under contract, and I was so excited about it because I didn't know what I was doing, but somebody was going to sell me an apartment building. So I put
Hmm.
this thing under contract for what I thought at the time was a great price, right? And learned later that it wasn't. I made those buying mistakes early on. And I wound up, I said, okay, so now how am I going to raise money? I had no idea. I didn't know anybody. My family, my friends didn't have any money. And so I said, let me do this. I put an ad in the newspaper, in a classified newspaper
Wow.
section. And all it said was real estate investors wanted. my phone number. My phone rang for about 7 days. I spent $45 on that ad for 4 days. And over 6 months, I raised $700,000 from that one.
Wow.
And I don't think you could duplicate that today because there's,
Right.
real estate investing is so popular today. But then I started doing seminars in my office and working, building my database more and going to my investors in the database and just raising capital from it. And, we were doing these syndication deals and people were participating and we were having great results. Cash flow was great. And, but then 2008 rolled around and, anybody that knows what happened in 2008, it was like hitting a brick wall in a freight train at 200 miles an hour.
Mm-hmm.
So.
And how did that multifamily climate change then? Because you already kind of noticed the market was softening. You said like around 2005. So was it something that you kind of forecasted as well? Or I think like many people, they kind of didn't know how difficult it was going to be until it kind of just started happening. So how did because I'm sure by that point, maybe you've done a couple deals. How did those kind of pan out throughout the 2008 crash?
Yeah, great question. So 2005, I saw the market shifting, softening, didn't really know what was going to happen. Went into the multifamily space. 2007, I closed 2,200 units. We took on 2,200 units. And I always tell people, I say, hey, we grew way too fast because during 30 months, we brought on 4,000 units. And I thought I had a good team behind me that was supporting and stabilizing things and getting construction done. And I just kept running forward, growing this company. 2008, the residential market just went to hell, right? You had all this bad Wall Street paper. You had people that were you could get a mortgage in 2008 at 125% of what your house was worth. So if I was going to buy a house, I could walk into the bank, get a mortgage for $125,000 on that house, put money in my pocket and walk away. Everybody was over the top on
that's crazy
loan to value, right? Banks were throwing money at people. And so that started happening. But my thought was, hey, all these people are going to lose their houses in foreclosure. They're going to still need apartments, right? They're going to need a place to live. So I kept running at the apartment business. One of the things I didn't check was employment diversification in markets. So we had a big portfolio in the Ohio Valley area. And I'll just use this as an example. In the Ohio Valley area, you had two main employers. You had transportation. So you had DHL and Federal Express and UPS that were really big in those markets. And you had car part manufacturing companies. So these were the little manufacturers, the mom and pop shops that made knobs for radios, plastic mold injection, dashboards. They made the beading for car seats. So what two industries got hit the worst in 2008? Transportation and automobile manufacturing, right? Right along with real estate. So all those small businesses went out of business. Everybody lost their job. Nobody could pay rent. People moved out. We had people move out of apartments in droves. So what happens is you lose your revenue. Your NOI drops. You pay your bills. So all of a sudden, here we are faced with this economic adversity. By 2010, we had totally come off the rails because of the loss in revenue, the loss of income. We'd gone back to a few banks, tried to, remitigate some of the loans. We got reductions in interest rates. We even got principal reductions in some of our loans. And it just wasn't enough to weather the storm. So, I probably at the time had 12 deals that I should have just let go to foreclosure, but I didn't. I tried to save all my investors, save all my property. And I should have just let those deals go to foreclosure, let a few investors get hurt. We probably could have rode out the storm, but I tried to save the company. So what I started to do is I started to move money back and forth between profitable to non-profitable companies. My accountant and my attorney both said, hey, it's okay to do that. Just leave a paper trail. When the markets bounce back, put the money back. It sounded like a great plan. So we were doing that. My thought was, hey, this is just a recession. It's going to last 17 or 18 months. The markets will bounce back, and maybe there'll be a 10 or 12% correction in the marketplace. Goes to my history in the business. I had gone through a couple of recessions. I came into the market or came into the business right when a recession was ending. Right. And, it lasted 7 or 8 years, and it crushed a lot of people. Mm-hmm. So because I didn't tell my investors, though, what I was doing, I wasn't transparent. I wound up getting in trouble, and I wound up being charged on wire fraud and mail fraud charges and got sentenced to 10 years in federal prison as a result of it. For, when we take other people's money, Tim, if you gave me $10 mm-hmm. and, I'm held at a much higher standard than the average person out there. You're looked at differently. You're looked at through a different lens. Mm-hmm. If you are not being very transparent about those investments and about that capital, it's very easy to get in trouble. So, we rode the storm out as long as we could, trying to move money back and forth, and I wound up being charged on wire fraud and mail fraud charges, and I got sentenced to 10 years in federal prison as a result of it.
Amazing. It's crazy because we heard your story obviously a couple of weeks ago, and even hearing it, like you don't really hear many people share these sort of things, or obviously we'll talk about the bounce back after the fact, but I'm sure finding that out, like it just kind of like the emotional roller coaster. You have a family, right? And like mm-hmm. what that does to your talk about mental health and like dealing with that. And you served the full 10 years, right?
8. But
8 years.
Here's the 5 mistakes I made along the way. And if people would just take heed to that today, because of the environment we're in, I grew way too fast. This marathon is not a sprint. You don't have to grow too fast. I was very unstable as a company because of that. I was over leveraged. I owned $60 million worth of real estate at 85% loan to value. And I always say, I don't know who was worse, me for taking the money or the banks for giving it to me.
Right.
I was undercapitalized as a company, and I didn't pay attention to the KPIs, those key performance indicators, right? Where were we at? I think if we'd have known better where we were at the time, we might have been able to mitigate the storm a little more. And then most important, I didn't listen to people around me. And I think we all need to listen to people around us, especially spouses, significant others, because I think they see things that are going on in your life that you might not see yourself. And if I just would have listened to my wife and an attorney, about some other things happening in my business that I didn't notice or didn't care to notice. Things might have been a little different, but hey, listen, I believe today it's not what happens to us, it happens for us. What happens, right? So the lessons I learned from that are incredible and are taking me on a path and a journey today that I never thought I would have been able to participate in.
Yeah. I think that's really important that you share some of the things that you think the 5 keys that you took away from that situation. And you did ask your accountant beforehand. You did ask, some people to make sure that you were covered, right? Which you thought you were at that point. And so, we, as investors, as people getting into real estate, just make sure your circle knows, ask your circle, whether it's like you said, your spouse or people around you, or even your attorney, your mentor, your business partner, whatever it is that, have things, discuss things, and make sure that, either you're on the same page, or making sure that you have all your bases covered basically on that.
Right. And the team too. I mean, you had
Yeah.
a whole team around you as well, and I'm sure you trusted these people who were part of your team. And so I think just I don't know what happened to them after
Yeah.
the fact. You probably haven't heard from them since. Probably ghosted you, but I think that's why it's so important to vet out the people that you do bring along your team. And sometimes it's like, you find out the hard way, unfortunately for you, but it worked out. Like you said, I'm a firm believer everything happens for a reason.
Mm-hmm.
But tell us, because I know, and I appreciate you sharing that, because
Yeah.
again, you don't really hear that quite often. But tell us, like, from the time you spent in prison, like I know you wrote a book, and you can talk to us about, like, the just from a mental aspect, like what that was like, and like coming out of prison and adjusting to all that. It's just a whole ton of transitions and adjustments.
Yeah, it sure is. And, hey, I went in and, I always tell people, I say, I never flew private. I didn't have a boat. I didn't have a big house. I didn't have a fancy car. I was a neighborhood baseball coach. I was home every night for dinner.
Mm-hmm.
And I got ripped from that to live in a 12 by 12 room with three men I didn't know, nor did I like, wondering what the hell happened in my life.
Mm-hmm.
And, I walked around every day, like, just in this world of how am I going to get through today, much less 10 years.
Right.
And, I walk in, I'd been in prison for about 3 weeks. My wife divorced me. It wrecked me. And I just couldn't get my arms around life. Right. There were some
Right.
people that were in prison that walked next to me, that lifted me up, that helped me get through that first 6, 12, 18 months till I finally got my head on straight. Right.
Mm-hmm.
I was probably in prison like 6 weeks, and I walk in the gym one day, and I always tell people, I say, hey, I was just window shopping. I wasn't looking for a weight. I wasn't looking for a treadmill. And I'd gone from running marathons to being 35 pounds overweight. I absolutely hated myself. But I walk in the gym one day, and this guy walks over to me. He was probably 20 years younger than me. And he said, hey, don't let these people beat you. All they want to do is take from you everything you've ever known. They can take your business, they can take your money, they can destroy your family, but what they can't take is who you are and what you're made of. They can't take what you have in your heart and in your head. He goes, you can get all that back. He goes, all you have to do is get through this time. He goes, look, come to my class every day, start working out. You'll start to lose weight. You'll start to feel better. And, I think we're faced with defining moments in our life that we have a choice that we can either say yes to or no to, right? But somebody like flipped the switch that day.
Mm-hmm.
And I said, okay. And I don't know what, I still to this day don't know what made me say okay. But I started going to this class. I started working out. I started losing weight. I wound up going to college. I got a bachelor's degree in theology. I wrote 2 books. I wrote a book called Exit Plan, which is your complete guide to multifamily investing and why you need an exit plan before you buy. I wrote a book on property management. I wrote an ethics course. I taught real estate investing, property management, and ethics in prison for 6 years. I was on an outreach program. I'd go in the community and tell my story to small business owners and local college students.
Mm-hmm.
I happened to meet a professor from the University of Minnesota, and he and I co-authored a paper together that we had published in the Business Journal of Ethics that gets taught today at the collegiate level for forensic accounting and sales and marketing classes. I came home in 2020, the week they closed the world down from the pandemic.
That's so crazy.
But I went from one prison right into another.
Oh my goodness.
Right. But at least you were free.
Right.
And I thought, I'm going to go in the coaching and training business. So, about 6 months out, I started doing coaching and training. And one of the things that we do in the multifamily business is we deeply analyze or underwrite deals. So I said, well, I'm going to have to figure out how to do that again. So I started underwriting deals and pulled my old tools out and, started calculating and looking at deals and building broker relationships and getting deals sent across my desk. Well, I found a deal in Florida, and I went to two of my coaching clients, and I love coaching people who want the business as bad as I do.
Mm-hmm.
We wind up partnering together and doing deals together. But I went to these coaching clients and said, hey, I think we should do this. And we tore it apart and looked at it. We wound up buying this deal. But along the way, my securities attorney said, hey, I think I can get you approved by the SEC to go back and be an issuer of securities. I said, have at it. So we never talked about it again. Like 3 months later, she comes to a partner call one morning and it says, hey, look what I have. And she had a written approval from the SEC that said I could go back and sponsor deals, raise capital, be an issuer of securities again. And, it was like an amazing turning point in my life. Not everything's perfect. I hate what I did, right? I broke the law. I hurt some people. I feel terrible about that. But today my life is about helping people learn more, grow more, do more. I feel that, I provide hope and inspiration because I don't want people to feel like they have to be defined by their past, right?
Right.
I think, hey, I might have been in a prison behind a wall, but so many people are locked up in a prison in their own mind, whether it's addiction or whether it's, sexual abuse or verbal abuse, whatever it could be. People need to understand that you don't have to be dictated by your past, that you can move forward. Gladia, you kind of mentioned something about people don't talk about this, right?
Right.
And I was locked up with a bunch of real estate people that came home and they won't talk about it. One of my best friends, we've known each other for 25 years. We wound up running into each other in prison because he got in trouble. But he's at home and he won't talk about it. He doesn't want people to know. People came home and they've changed their names and they're doing, they're working at Walmart. They're, so I want people to understand, don't let your past define your future.
Yeah.
That's so key. And I think it's the work you did in prison on yourself that probably made it. I mean, yeah, you transitioned, you got out when it was like the world shut down, but that's still that work you put in on yourself and like working for others. Really, seemed like it was a smooth transition into coaching, into getting things right because you got your mind right first. And I think that's a great tip for anybody out there is like, once you get your mind right, like everything's effortless. It's endless, the opportunities that come out of you. So I think it's also the work that you did, while in prison, because like you said, some people probably didn't do that, and so you come out to the real world and you're just like, oh, where do I even go? I'm the victim. This sucks, and you end up, having to pick yourself up, start off from ground zero. So I think that's a great tip for anybody that feels like they're in a prison or feels like, their mind's not right. Get your mind right first, and the rest will kind of fall into place. So I love that. I think that really probably did help to where you're at now.
Yeah. Thank you.
Yeah. And, I think real estate gave you, a second life too. Like you learn from that. You learn what you wanted to do, kind of educate people on what not to do. You've had this abundant experience of, residential and then also now multifamily. You wrote books. And then, I think a lot of people that leave prison for whatever reason and get out feel lost. And I think real estate would give them, I know people that are in our group that, have gotten out of prison and got into real estate and gave them a second life and gave them a purpose
Hope
as well. Yeah. Hope hope is a big one, and for them not growing up in the right areas or being exposed to real estate in a way, like I was as well too. So I think, like Ladia said, it just gives people that hope that they can make it, because life after prison, getting a 9 to 5 job isn't really something that, people want to do, or they get treated totally different. So being in real estate, doing it, being your kind of own boss type of thing, and getting into that, I think is a testament of people that they can, and gives them hope, and I would ask for you is, like, for someone that doesn't have much to work with, what really advice would you give someone that is starting into maybe getting into multifamily real estate? Or what would you say, how would they get started? Would they get a mentor, or do they just need to kind of get into a program? Or what's your advice on, for someone that's kind of starting out?
Yeah. So partner with a team, figure out what you're really good at. Like there's 13 different things that happen in a multifamily syndication. Figure out which part of those you're really good at, and then go take your skills to somebody else. I would tell people, go get a coach. There's a bunch of coaches out there, but go get a coach for yourself. Somebody who can walk you through all the fundamentals, hold you accountable to taking action and pushing you forward. I do coaching, but you don't have to use me. There's plenty of people out there that you can coach with. I'm not an advocate of a $40,000 or a $50,000 program either. I think if somebody has that kind of money, they should, find a coach that they can pay less to and put money in a deal, and, be part of a deal passively and see how that works. Right. So I'm an advocate for that as well. But it's about getting the education, but education only takes you so far. It's the action you have to take.
I was going to say,
in order to be successful.
100%.
That's a great tip. And we're part of a wholesaling program. That's kind of how we got started. And one thing I've learned too with wholesaling is you learn how to get in front of sellers, right? How to market direct to seller. So if you can kind of utilize those skills, you can really replicate it in marketing out to multifamily owners as well as like, collaborating with brokers and such. But one of the biggest things that we promote in this program is also JVing with each other. It's like, get in touch. Who's the head wholesaler in this market that you want to be in, whether it be virtual or your own, and partner up with them. So I do agree, partnering up with people that know what they're doing, have done it before, and then finding how can I add value. I think that's always the biggest thing for that. But I did kind of want to ask, because you kind of going back to your story where you transitioned, found a deal. How are you adjusting now over the last couple of years that you're been out of prison? You're coaching, obviously, but the kind of deals that you're working on now. How many deals have you worked on, and so far, and how is that going? And maybe a kind of piggyback question to that is, like, with the market as well, kind of changing.
Yeah. So with the market changing, I'm extremely conservative. I don't know that you'll find somebody as conservative as I am, because I'm gun shy too, right? So I had somebody say to me one day, "Hey, are you raising capital yet?" And this was a couple years ago, and I said, "No, I don't think I'll ever raise capital." And they said, "Wow, why would I trust anybody other than you or somebody like you? Because you've already made the mistakes. You know what to look out for." And I think I know what to look out for today. So we did a deal in 2021, right in December of 2021, and didn't do anything except look at deals in 2022. And this goes back to conservativeness. My underwriter and I underwrote 90 transactions for $1 billion in product, to go to write 7 LOIs, letters of intent to purchase.
Yep.
Get to the altar. We wrote 10 LOIs, got to the altar 7 times. 3 times we were in the final round to walk away from deals for $300,000-$400,000 because they just didn't make sense any higher than where we were. So I'm very conservative. We actually were doing a deal right now. It's in Tulsa, Oklahoma. It's a huge booming market. I think we're there before the smart money's there, and I think some of the big players figure it out. It's gonna open up even more. But we're buying 277 units of 5-property portfolio, and hey, we're assuming 5 mortgages at a blended rate of 3.6%. I had an investor tell me the other day, he said, even if you guys screw up, it can't be that bad with that interest rate. Well, we won't screw up, but you're right. So, it's a big CapEx project. We're going to go in, put, over $2 million in capital improvements. The current owner's an awful owner. We'll go in and straighten out the operations, be a 4.5-year hold. That interest rates that we're assuming are fixed rate for 8 years. So that'll give us the opportunity to get out at about 4.5 years because we think somebody else will want to assume those interest rates.
Sure.
Mm-hmm.
Right.
Our investors, have a great opportunity for, a 7% preferred return along the way with a pretty decent back end, not even including the tax advantages that they get to take.
Mm-hmm.
So big depreciation value on this one.
Now, is that more of it's a value add? What asset class was that at?
Yeah, it's a C-class product. So 4 of the assets were built like in the late 70s, and 1 was built in the early 90s. But it's a C-class asset.
Got it.
Yeah.
That's great. And I know that, getting into, the deal and, talking to investors, what potential pitfalls or risks that you think people should be, or investors should be cautious about in venturing into multifamily?
Yeah. So, you want to maybe just look at the market a little bit today, right? I think that you've got brokers that are bringing deals to the market. And listen, I'm not bashing brokers. Everybody's trying to make a living.
Right.
Brokers that are bringing deals to the market still on pro forma basis. So they're trying to sell you a deal where you have to do all the work, and then 2 years from now you can start at zero making some money and
sell you the dream.
Right. And listen, I'd love to sell deals like that all day long too, but as a buyer for my investors, I need to make sure that I can give them a return, and I can't do that based on a pro forma basis. So you need to watch out for that. The other thing is leverage. Do not go into these deals over leveraged. I say 65% to 70% at a minimum. I was 85% LTV on all my deals. It was just crazy. It was brain damage. Can't pay your bill. So, and so, those are 2 key principles. And then make sure that you're asset managing, right? There's that difference between property management and asset management. Make sure that you're paying attention to the KPIs and that your boots on the ground are doing the work they need to be doing.
Right. Yeah, I think that's so key with the pro forma. I mean, we're dealing with that too with the brokers we're working with out here in LA that are like, this is a great deal. It's cap rate at this and that, and we punch the numbers, and it's like, are you sure about that? It's like that meme. Are you sure about that? So I think this is why partnering up, if you do get into multifamily, is like partnering up with people that you trust. And obviously having an underwrite, you have an underwriter yourself. And that was going to kind of be my question, is like, what's kind of your process? Like, I don't know how big your team is right now that focuses on the acquisition side. Like, walk us through what that process looks like.
Yeah. So, so I have an underwriter that, God, I've been working with him now for about a year. He came to me as a finance major at TCU, really smart young guy. And he said, "Hey, I want to learn how to underwrite." And I started teaching him, and we started sourcing deals, and we just started looking, and we work really well together. He'll look at a deal, bring it to me, we'll tear it apart. And and now we're at a point where he understands what makes sense for us, and we'll only look for that product, right?
Mm-hmm.
CB product, that value add, that's garden style, so many units, so much per door, those types of things. And I'm a market driven investor, so we only look in markets that make sense. I don't do anything in Chicago, and you know what? I don't do anything in California.
Yep.
Not many do. I understand.
Yeah, I know. I don't blame you. Yeah, that's all right.
But I love Florida, and I love Alabama, and I love Georgia and Texas, and now we love Oklahoma and Northwest Arkansas. So, there's markets that make sense. Then we have a partner that is kind of our compliance. Keeps us legal, keeps us honest, takes care of all the investor documents, investor portals, insurance, funding, all the details, utility bills, all of that. Just somebody who keeps the ball running, right?
Right.
That's a really good partner. And then we'll partner with someone who's a key principal, somebody who has the buying power to sign on a loan, that has assets under management, that's bank approvable, and bring that person to the table also. So that's what really makes up our core team. And then depending on how big the asset is, we may have to bring people in to help raise capital, and be part of the GP team. And then the asset management piece, we always will third party management, so we'll hire a company to manage that asset. So it's kind of how our team looks. Multifamily is a team sport. It's and when I think back, my old company, I had people working for me, and they did the same thing, but I paid them on a salary. Now people, now you kill what you eat, or you eat what you kill. Right? So everybody participates.
Yeah. Quick question too, is that like, what's the so for people that don't know, what is the cap stack for like one of your deals? So how is that broken down?
Yeah. So normally, we do a 70-30 type deal structure, right? So 70% goes to our investors. That's that lion's portion. A-class investor, A-class shareholders in the deal. They own the real estate through the LLC. We're on the B-class side. We own 30%. But when you talk about capital stack, generally we're going to be 65 to 70% LTV. The rest will be equity. From time to time, you might stick some preferred equity or bridge equity, bridge loan in there for capital improvements or something like that. I'm a simple guy. I don't like to complicate things, because I think that you lose a lot in the midst of that. So I like to, hey, equity, debt, our portion as being the GP side, and simple capital stack. I don't like waterfalls. I don't. It's a 70-30 deal. Anything over the pref, we split 70-30. So I'm simple, because too many investors get caught up in. So what, if you're trying to do a waterfall or something, too many investors get caught up in, hey, so tell me again what happens if you hit 8%, then what happens to the split?
Mm-hmm.
Just gets to be brain damage.
Yeah, I understand for sure. And that's, I think keeping it simple like that is the smart thing to do. Because when
Yeah.
you get too many investors and dilution and stuff, it gets
It gets messy.
a little hairy. Yeah, for sure.
Yeah.
Messy's a good way to put it, Gladys.
Yeah, things can get quite messy when you get, like you said, get a good big pool of people. We do have a question here, and I'm sure with multifamily, I don't know if the tenants that you do have in your all the doors that you own are Section 8. Is that something that you involved with, or maybe depending on the asset class, maybe not? Just curious, since there's a question about that.
So I'm not in the affordable housing space. I'm not in the tax credit or light income tax credit space, right? We're market rate rent. And the reason I
Right.
like that space is because I get to raise my rents.
Right.
So if I'm in those other affordable housing spaces, you're restricted to bond deals or tax credits, things like that. So
Right.
again, I'm a simple guy. Give me something I can raise my rent, create more revenue, and add more value to the property. So we do Section 8 though. So 20-30% of our tenants in a particular property could be Section 8 tenants, and
Right.
I don't have any problem with that. My mission as an operator is to provide safe and secure housing for my tenants. I think there's a lot of single parents out there, single moms especially, and I think it's probably because I got raised by a single mom that, they're at work. They want to know that when their child comes home from school, that their door is closing behind them and they're not getting hassled or chased down the hallway or, tried to sell drugs or guns. And so I want to provide that safe and secure housing for our tenants.
That's good.
Great.
That's
Yeah,
awesome.
and I think with the which is why you don't look into California, which we're dealing with a few deals, looking in dealing with tenants and the issues there and legislation and such. And I mean, it just varies. I think, like you put it perfectly, I keep things simple, and simple being I know what I want. This is exactly my criteria. Nothing's going to deter me off of that lane. Whereas some people, that's their bread and butter, right? Is affordable housing. They have a whole process where it's like, okay, maybe I'm not going to add all these extra amenities. I'm building a complex, but we're limiting that due to, and just understanding, right? In your underwriting, you're going to plug that in. So I think that's really key for people as well, is like, understand what it is you're looking for and why. Again, you should partner up with somebody who understands that too, because you can't just be like, well, I want to do this and I want to do that and that. That you kind of lose focus in that sense, because I think that happens a lot. I think we have a special guest on here.
Yeah.
Who's your favorite realtor in Long Beach?
I just want Stephanie to know that Stephanie's my favorite realtor in Long Beach. Right?
We have to bring her on here and send her the guest link. That's hilarious. But I mean, also kind of going into like social media and like how you use social media to like also kind of promote not just your coaching, but finding investors, I'm sure, right? In on these deals.
Social media, you could find me anywhere, right? Instagram, Twitter, TikTok, LinkedIn. I do have a team that helps support that, and I'm always trying to put some educational content out there. I want people a nugget, right? I want people to understand. Just like this morning, I put a piece out on LinkedIn that just talked about what's a syndication, right? Because I think a lot of people get hung up in the definition or terminology, and so
exactly,
I want people to understand what it is and how it works and how they can benefit from it. So I try to do a lot of education, whether it's video. I do a couple of events throughout the year, things that benefit people. I have a 2-day summit coming up in October. So that'll be exciting. And it's not just me, but I bring other speakers on to talk about, different aspects of the business.
I love that. And that's in October?
It is October 19th and 20th. Yeah, we're just Matter of fact, let me, if you have anybody here who listens to this and they want a ticket, I'll give them a ticket. So.
Ooh.
Hey, you heard it here.
I know. I think I know somebody who we could give it to.
You heard it first here.
You heard
First
it first
year, I'll
here.
get the
There you
bag.
go. There you go.
I love
There you
it.
go.
I love
It's
it.
in the bag now.
Right. Oh my goodness.
That's awesome.
Well, I know we're approaching kind of the end, and again, yeah, I think you've dropped a ton of gems in and of itself. Tell us sort of like, because I think you maybe have mentioned it too, but if you can do anything different from even maybe the time you got started in multifamily, is there anything besides maybe not listening to your attorney and tax person then, but is there anything specific on the multifamily side that you would do differently, knowing what you know now?
I would have got a coach from the beginning. I would have gotten a little bit more educated before I'm a jump in with 2 feet kind of guy.
Right.
I take a little bit more risk than the average person. I've backed off a little bit, between what happened, and the older I get, I think I have more wisdom today, but I still want to function or operate at a higher level. So I would tell people, and you know what, be careful about your partner and who you choose and the relation, make sure that you are, yeah, I've gone into partnerships with people and, left because, trying to get, so don't be afraid to walk away from a partnership or that might not be healthy for you.
100%.
That's a great tip. I know, Tim, you've gone through some partnership in previous businesses, and I think that's so key. And why should anything you do put together have it on paper, have it, have a paper trail on that, because things do go sour, especially when money is involved. So I love that. But those are such great tips. We want to end it with some fire questions. Very short. I think just based off our discussion, I already know what you're going to answer with, but we're keeping it simple. This is a first time. I don't know what we're going to call it yet, but we're just calling it hot fire questions, where we're going to list off 5 questions. They have to be one-worded answers. You can, maybe add like a sentence to it, but nothing crazy. It's all related to multifamily.
Okay, great. I'm ready.
I won't put you on the spot or anything like that. So
who's my favorite realtor in Long Beach?
Yeah, there you
exactly.
go.
That's we already got that off the bat. So
yeah, that was a freebie.
That was a warm up to that. Small or large multifamily?
150 to 250 units is what I prefer. I try to teach coaching clients in the beginning, 1 to 3 million, could be 20 to 50 units in that range.
Okay.
Right. Perfect. Class A or Class C?
BC.
BC. Value add or stabilize?
I like value add. I like to increase the value.
Perfect. Value appreciation or cash flow focus?
I need to have both or I won't do the deal.
Okay.
That's a gem.
That's a gem. This one I think I know, but syndication or direct ownership?
Syndication.
Awesome. I need to add those like sound effects. Boom, 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 boom.
I know.
You completed the fire round.
There you go.
Done. Mike, it was such a pleasure. Thank you so much for joining us. We'll make sure, I think I've added all of your information and how people can reach you on the show notes. But thank you again. We'll definitely keep in touch, and hopefully maybe we can do a deal together.
Yeah, for sure.
I sent you guys the Tulsa deal to look at, didn't I?
I think I got it. Yeah. I have. I'll deep dive into it.
Yeah,
for
take
sure.
a look at it if you know anybody who might have an interest. There's, we have plenty of participation opportunity left in it. So.
Okay.
Love it.
Will do. Yep. Awesome. Is there anything that you want to leave people with before we leave?
Yeah, just don't lose sight. Don't let the market changes affect you where you say that you can't do something. Don't put your pencils down right now. Keep underwriting. I think right now we're going to go into a time that will be some of the greatest real estate deals anybody's ever seen. And you can position yourself today in front of the next bull run. And why not be in front of it next time?
It's awesome.
I love it. Thank you again, Mike, for joining us. And thank you everybody who was in the chat and commenting. If you have any questions, feel free to reach out to Mike. I believe his IG handle and his website is on there. But we'll be back next week. Have a great rest of your week. Talk to you guys later.